Hello everyone, welcome back to Candlestick chart pattern. Today we are going to discuss bearish engulfing and bullish engulfing candlestick. These are the two candlestick pattern is opposite of one another one. This is the how it looks like, bullish engulfing and bearish engulfing. The first one, bullish engulfing, it shows us that price is about to reversal from this point, and the second, it gives us a signal that price is about to come on a lower side from bearish engulfing. So let's understand what is the bearish engulfing candlestick. A bearish engulfing pattern can occur anywhere, but it is more significant if it occurs after the price upward move. That means that your price is moving from lower end to higher end near to the resistance or breakout for the past 4 or 5 days. Then we have this one candle which is green candle. So this is our bullish candle, and the next day what will happen, that this price will open higher from the previous one, this one, and then we have a close lower than the previous one. So here most important is what, this is the body size. If you see over here, this one is engulfed the previous one. I would suggest to avoid if only the wicks is engulfed and the body size is lower than the previous one. We should avoid, we should not trade. That we'll see example in our later on. So this is the how it looks like bearish engulfing, and it shows us that the price is about to come lower in the future once confirmation. So the opposite is from the bearish is bullish engulfing. In this one, it's totally opposite. The price is coming lower for the last 4 or 5 days. Then we have one candle which is the red candle, which is bearish candle, and the next day the price is open lower than the previous one over here, and our body was closed higher than the previous one. Your closing was somewhere around here. This is showing that the here high chance that price are reversal from at this level, and we are moving higher from this level. Just only we need a confirmation. Here also the same, that there are so many time it happened, the candlestick occurs in between this the resistance and support, but if it's in the center, it can be considered as a continuation of trend. Ideal if it occurs at near to the support, then we can trade as a bullish candle. So now let's move to the chart and see how we can trade. So let's understand first the bearish engulfing candle example. So the first, this one candle, and that's the second one. Here we have seen this is the trend line is going down. So the first candle, this one occurs. The price will continue moving higher from the lower end, and then we have seen this candle. I'll zoom a bit so to understand clearly. This is the candle, is a green candle. The next day what happened, the price is open over here, make high toward the trend line, rejected from there, and then the seller takes the control, close lower than the previous one. This is the consider as a bearish engulfing. How you can trade? You need to do simple. When there is a low, just make a mark over this over here. Your stop loss will be around here. The first candle will be high, is your stop loss, and then ideal target is 1:1, and then after you can trail your stop loss for the further target 1:2. So here your sell activate at this candle, and then you can continue. The second also occurs here. Why we can take this trade also, because if you see over here, this candle high is not higher than this previous one, so it's facing resistance here. The price was moving up from 448 to the higher 500. That means almost here 12 to 15% move, and then after we have seen bearish engulfing candle. This is the confirmation once this trading below over here, and at this level you can see the price reversal, and it sign us that price is going lower down. And earlier I have seen that which you should avoid. At last few slides I have discussed with you, this is the candle we should avoid. We can see here this is showing that bearish engulfing, but we should avoid this candle because it's, for me, is I just consider this one as a inside buyer candle. Now we'll see example for the bullish engulfing. If you see over here, then the question comes in your mind that earlier I have said in the center, but if you can see over here, this is considered as a continuation of the price movement, because the price is continue moving from up here. This is the previous resistance that we have seen here, the bullish engulfing candle, and the body is engulf the previous one, so this one is also ideal candle to trade. The next day price above, open above this candle and it's continue going upward, so this candle also you can take trade. There is another example also for this candle. This is another example of the bullish engulfing candle. The price was coming down from 13,227 to the low make is 12,165. Then after there is a follow of one candle red, and then the price open lower than the previous one, totally engulf the body, and then our activation price over here. So what we need to do is we need to just draw a one line, wait for the confirmation to break out. This candle gave us a confirmation of breakout. After the confirmation, a low, this one will be a stop loss 1:1 target, then we'll trail the stop loss for the further up. This is how we can take the trade of the bullish engulfing. Higher chance of winning ratio for this one. Just make sure that you avoid what I have discussed earlier. If the body size is not engulfed to the previous one, we should avoid. I hope you guys like this explanation and you will practice on that for your improve your trading skill. Thank you guys for watching. See you on the next video. Take care. Bye bye.